the trade data from China is actually pretty good in the last few months, holding steady. And because probably China was not affected as much as by the virus, coronavirus, as bad as the other countries. So I do think China is recovering back pretty well. Just that a lot of investors or people or companies or businesses in China are still a little bit worried about the worsening situation between China and the U.S. and they really don't know what the U.S. will do. On the trade side, it looks pretty steady, but the increasing pressure from the U.S. on Chinese businesses in the U.S. or in other countries will actually affect their decisions in the future. So yeah. I do not expect a big spike, on the import or export data to related with the U.S.
And Jackson, I mean, as you mentioned, it's really the actions on businesses that are gaining more attention now than just the trade headlines. This idea about the tech war and the steps that the U.S. administration has now taken against Huawei are so severe that many do worry about blowback from Beijing. Yet the markets have not reacted that strongly. I mean, why is that?
Well, I think the markets in the U.S. and China, they are actually best performing markets in the world at this point. When we look at the relationship between these two countries, we are really puzzled why they are so diverged. I think China is more focusing on domestic consumptions. Even the U.S. is trying to the same strategy that on trade, now on the businesses of the Chinese companies. They are more on the domestic consumption side because they have a huge market, they have huge population, so they can survive by themselves. But we don't see the momentum as the U.S. equities because a lot of things in China are still depending on the U.S. Well, when we look at the U.S. markets, I think simply because they are the dominating, a lot of the companies, especially internet-related or new technology-related, are all in the U.S. So the NASDAQ is driving up the markets. And also on the backdrop of that, the weakening U.S. dollar is pushing up all the asset prices. So I think the U.S. market's high performance is really because of the structural difference of the U.S. markets. The China side is a little bit fragile. They are trying to move on to more on the domestic consumption side. So that's why the markets are still doing well while the relationship is worsening.